Chetan, I guess my question is, how did you model what that's going to be?
So essentially, we've tried to look at the number of days by which the social distancing serves the business conditions. And that's what we have tried to model. And of course, there are a lot of assumptions in terms of when the virus peaks in different parts of the world. But at this point of time, we are operating with an assumption that the virus itself will peak in second half of April or early May globally. So that's our basis. If it goes farther than that, there's more downside to growth.
So where would be the biggest hit? Because, you know, a week and a half ago, we were all talking about China and a V-shaped recovery. Now what's the real conversation?
So it's gone beyond that. We all know it's gone in Europe. And I think the biggest problem that we've had in terms of understanding the impact is that the spread of the virus has been much more than what anybody would have anticipated in Europe. And the outcome in Italy has made people rethink about the way it's evolving in other parts of the world other than China. And similarly, what we are now grappling with is what will be the pace of rise in number of cases in the U.S. We will know that outcome in the next few days as the testing gets ramped up. But it's really the nature of the virus itself is adding to the uncertainty on the outlook.
What does your recession call mean for stimulus and central bank action? What does it imply?
So right now, what we've seen is that we have seen aggressive monetary policy response first. So we tend to measure the monetary policy response in form of global weighted average monetary policy rate that actually includes the QE effect and also takes into consideration nominal policy rates. And that has already gone below the levels we had seen post-credit crisis. So we've gone to a new low in terms of monetary policy support for the global economy, and we expect more. In terms of number of central banks, we've seen 18 central banks globally out of the 30 that we cover. And by the time we reached third quarter, that number would have increased from 18 to 25 central banks on easing path. And then on fiscal policy, we've seen everybody making announcements. And when we did this report where we are calling for global recession, what we came up with the global fiscal policy response for G4 plus China is that they will be doing a 200 basis point expansion in fiscal deficit, which would be quite significant. And in terms of nominal dollar trillions, it's $1.3 trillion that impact from G4 plus China on fiscal stimulus. And mind you, for this, we have assumed that the U.S. will do a $350 billion stimulus, but things are evolving quite fast. You know the numbers you guys are putting out on Bloomberg. They're rising by the day. But if it is $800 billion instead of $350 billion, then the global stimulus on fiscal front will rise to about $1.75 trillion.
What's the blowback, Chetan, from that? And we're seeing it less here in the U.S., but more in Europe, as we're talking about a lot of stimulus packages, potentially some issuance coming from the EU, paring back some of the regulatory money that banks have to hold in order to free up lending. And bond yields are blowing out. Yield curves are steepening. The dollar is surging. Like, what's going to be the longer-term effects of this kind of stimulus, even if it helps in the short term?
Well, actually, the longer-term effect is something that we would probably be happy about of the outcome if it comes to, which is that you can finally get the inflation coming back. But at this point of time, you know, we still have to go through the near-term problem of actually stimulating the demand. But look, in the backdrop, what has been happening is that global economy has been going through what we call it as the 3D problem, demographics and disinflation. And in that environment, what you really need is this strong fiscal policy response. So what this cyclical or sudden shock is doing is getting the policymakers to put that fiscal stimulus in action. I would say that that's the right response that the doctor would have ordered for this kind of environment.
I want to bring back in Marvin Loh of State Street. So, Marvin, if we're on the right track here, yet we're still looking at a recession, how do you need to asset allocate right now?
I think you need to think through what the world is going to look like when this is done. You know, rates are certainly higher than they were, but they're still going to remain relatively low. Central banks are going to, be there in a way that they weren't during prior recessions, if you will. So you're going to have a lot of liquidity once we come out of this. You're going to have low rates. You need to allocate around, what you think does well in that kind of environment. Hopefully, it's a quick bounce back. And then the growth stories that you liked before are going to be the growth stories that you like afterwards. If you're a little bit more pessimistic, then you need to allocate around that. But I think this is the time to really think about what the world looks like when we get out of this, because we will, and hopefully it's going to happen sooner rather than later.
Well, and that echoes what we heard yesterday from President Trump in the press conference with the Treasury Secretary Steve Mnuchin. Chetan, he was basically like, we're going to get out of this, and when we do, we're going to be off to the races. The U.S. economy is really going to accelerate, and it's going to be great. Do you agree with that?
Well, I think I agree that we will come back strongly whenever we do. But the concern is, what is the duration for which the virus holds us back? So I would say that, if our base case is true, that you do get the virus peaking out in second half of April or May, I think we will come back relatively strongly. Mm-hmm. But if it gets into the third quarter, then we are talking about a serious problem in terms of corporate credit losses that we will suffer and the impact on the banking system. So I think it does depend on how we are held back because of this coronavirus.